Hello traders everywhere, Adam Hewison here with your midday market report for Monday the 29th of July. Well, you may have seen my rant, I'm going to call it a rant on Walmart, ammo, and the Constitution. It has everything to do with business, and if you have any comments, we'd love to hear from you, but just if you could do it, keep your language pretty clean so we can actually publish it on the blog. So let's go right to the markets now and see what's going on. Well, here we are, the Dow Industrials, two green trade triangles for S&P, two green trade triangles for the NASDAQ. So everything is intact still. A little bit of a pullback, but nothing to get too concerned about. So let's just take a look at the charts and go through them. So here we are. This is a one-year chart. You can see we actually have done very well for the year. We're up quite a bit. Starting the year right around the 13.2 level. And here we are, 13.1 level. We're up a good percentage point. But we're seeing a little bit of disparity here, and this is the disparity I'm talking about. We're seeing the MACD or the MACD turn down right here, and that could create some problems for the market. We've been losing momentum as we've been up here, so we need something else to push, some impetus to push this market high. Technically, it's still in a bull market based on our trade triangles. You have the 200-day moving average right here. It's still pointed higher. And both the 50-day moving average is also doing well. So let's take a look at the next market. That's going to be the S&P 500. Pretty much the same picture there. We're just very close to making that turn down, and certainly that's something to be mindful of. And if we were to see a pullback, we could certainly come back to the midpoint of the Donchian trade channel, which would take it right around the 16,450, 16,445 level. So let's see how that plays out. Generally speaking, though, the trend, the trade triangles are still positive, monthly positive and weekly positive. So moving on, we've got a couple of things to look at as well afterwards. But here's the NASDAQ. NASDAQ was doing very well earlier today based on Apple's action. We'll be talking about Apple in just a few minutes. And it looks as though that could really, it's beginning to, hasn't turned down yet, but it's getting very close to turning down. So you may see a pullback, but Apple may be the savior that saves the NASDAQ here. So cleared the recent highs back in the June period, July and May-June period, and it looks as though it still wants to go higher with all of our trade triangles still in a very positive mode. Three of them, plus 90 strong trend. So let's go on to our next market, and I'm going to move here, and this is gold. Gold sort of like really can't get going on anything dramatically. The intermediate term trend is positive, but the short term, really short term trend is what we trade against. The intermediate term trend is negative. So I'd want to be really just on the sidelines here in this market if you're not long-term bearish. But you know, there's a lot of people who've held on to this, and it's really kind of like holding on to an ice cube in the desert. It just sort of has been melting in your hands. But we may be getting close to making a turn. We talked about this area back here. We got down to I think 1183 or something like that, and that was very close to a 61.8% correction. If we scope this out just a little bit further, you can see taking it back to this level back here, and this high takes you, well, let's put it in, we can do it roughly quickly. So we got very close to that 61.8% correction, and that may be all we see on the downside in gold. We'll just have to watch that very carefully. You do have a divergence here also on the MACD, and that's another positive sign, but we don't have all of the pieces in place right now. We may be a little bit more patient on that one. So moving on to our next market, and that's crude oil. Now crude oil still in a positive mode, the weekly and the monthly still very positive. Only the daily is a little bit negative, but let's scope this in closer because I want to share with you, this is beginning to make that turnaround that we've been looking at. I would say market probably the next couple of days, if it goes over 106, I probably want to get long again on this market and push it up. But this is the midpoint of the Donchian trade channel. It's still in a bullish mode. I think we'll see a resumption of this trend. Maybe it's something happens in Egypt or something else happens in the world that we don't know about. But certainly speaking, the market really is beginning, and I mean beginning to regroup a little bit around here. And certainly it's finding some support right around the 103.90, 104 level. So let's move on to our next market, and that's going to be the euro against the dollar, and that is, you know, the 133 level was an area we were looking for it to get to. It's certainly gotten to that area. We may see a little bit more strength. Certainly the trade triangles are all positive on this market, and also the MACD is positive, losing a little bit of momentum, but I think we could see another push up, certainly to test the 133.50, 130, even the 134 level. So stay tuned on that one and stay in this trade. So let's go to our next market, and that's Apple Apple's put in a very strong day today. We're traded as high as 148.78, and that's the best levels we've seen in this market for quite some time. So I think we're trying to build this base out. If you haven't seen the special report we did on Apple, I highly recommend you take the time. It's an in-depth analysis, much more than we're showing you right now, of Apple and why we think the potential is there for it to go much, much higher, but only if certain parts of that fall into place. So anyway, that's Adam Hewison for Market Club. Thanks for stopping by. We'll be back tomorrow with a special report, so we'll see you then. Have a great trading day, everyone.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.